Welcome back to my channel, and in today's video we are going to be taking another look at the GBPUSD market structure. Well, the GBPUSD has been on a roller coaster ride lately. It's in its highest points around the 1.30450 level before pulling back into the 1.2900 zone following that disappointing UK retail sales data and, of course, a recent recovery in the US dollar. But here's the thing, even though the recent news might make us think um, that the pound sterling is in trouble, the decline in probability of a rate cut by the Bank of England could keep it moving higher because the inflation in the United Kingdom is considered stable in the month of June compared to May, with service inflation still high at 5.7%, and that's a big deal for the pound sterling. This means that there is no clear pressure on the Bank of England to cut interest rates anytime soon, keeping the long term outlook for the British pounds bullish. However, the recent resurgence in demand for the US dollar might cause the GBP USD to retrace a bit more in the short term before the next wave of bullish momentum will happen. So, the big question at this point is, when will the third leg of this bullish momentum that started in the month of April begin? Or, and what does the technical analysis say in this market? To navigate the current market dynamics, we are going to be, as always, leveraging the technical analysis overview to unravel the potential trajectory of price action in the coming week. Before we begin, please note that this presentation is purely educational and should not be considered financial advice. Trading the financial market involves risk, so always do your own research and consult with a financial advisor before making any investment decisions. With the groundwork laid, let's dive right into the business. Now, my first point of contact for this week is going to be on the daily time frame, where we do want to have an holistic perspective into what is really going on in this market. And what I did here on the daily time frame was to take into consideration the character of price action since the month of March. That's about 4 to 5 months of historical data to have an insight into the behavioral patterns of market participants. And if we do that appropriately, one thing we will notice here is that ever since price action dropped into that area around the 1.23 zone, that was in the month of April, the market has been on an ascending trend. And as a result of this, we can see how price action has evolved into an ascending channel. So when we connect the series of higher highs, we have the resistant line of the ascending channel here. And when we connect the series of higher lows, we have the support line of the ascending channel, further emphasizing how strong the buyers are at this point in time. And to further help us navigate the current market dynamic ahead of next week, I have my key level situated at that psychological area at the 1.2900 level. Now, if you look at this key level here, you will see that in the month of March, this area was a strong selling niche, and throughout the month of March, April, May, and June, price had continued to trade below this key level, further emphasizing the strength of the sellers whenever buyers push into this area. But unfortunately for the sellers, you'll see here that during the course of the upper week, we saw price finally breaking out of the 1.29 area to reference the resurgence in buy pressure in this particular market. Now, at this point in time, the question we want to be asking ourselves ahead of the new week is, since price has broken out of this key level at the 1.29 area, will it turn out to be a platform that will support another opportunity to join the uptrend continuation? Or are we going to see a situation where price is going to be respecting the resistant line of that ascending channel to incite a sell-off, maybe back into the support line of the ascending channel before the next wave of bullish momentum will happen? In order to navigate this current market dynamics, I have a simple trading setup as always on my 4 hours time frame, where we want to be using it to help us strategically position ourselves for the next move. However, before we go into the 4 hours time frame, it is time that we pay attention to upcoming economic events that will influence market sentiment next week. And by checking the economic calendar, um, we can identify how upcoming events might affect price action, and this will further help us spot potential correlations between key economic releases and specific technical patterns on the chart, allowing us to time our positioning more effectively. Now, for the upcoming week, and based on the asset we are looking at, we are going to be focusing on economic features from both the United States and the United Kingdom economic docket. Now, the first high impactful event for next week is going to be coming up on Wednesday, July 24, and we are looking at the S&P Global publication from both economies. Now, this data here will be giving us an insight into the health and performance of the service and manufacturing sector of both economies. And it's going to be playing a significant role in the trajectory of price action, even the anticipation of this event as well. Then on Thursday, July 25, we are going to be looking at the gross domestic product annualized for quarter two from the United States, an annual growth rate data, which measures the total value of goods and services produced within the United States during the second quarter. Then on Friday, we will be looking at the core personal consumption expenditure price index, which measures the average change in the last 30 days in the prices paid by consumers for goods and services. So these are the events we want to be looking out for. I encourage us all to mark out the timing on our calendars, as we want to be looking at how market participants will be anticipating this event, which obviously will reflect on the chart as price action. Talking about price action, we'll scale down into the 4 hours time frame, where I have a simple trading setup to guide our decisions going forward. Now, on the 4 hours time frame, after considering the character of price action in the last 3 to 4 weeks, it is quite clear the market is very bullish and price still remains above our ascending trend line. And of course, you'll see connecting the series of higher lows here, I have a couple of ascending trend line which buttresses how strong the buyers are at this point in time. And of course, for those of you who have been with me for a while now, you know how we use our ascending trend lines. As long as price remains above them, we will continue to look out for patterns and structures that support the idea of buying this asset. So since price action broke above our key level a couple of weeks ago, you will see that price has maintained its momentum above this area. As you will see, every attempt by sellers to break through has always been met with strong resistance from the buyers, and the same thing also happened here during the last trading day of last week. So you see that despite that strong bearish momentum that started midweek, sellers were unable to break down the structure. And look at how beautifully the key level and those trend lines share a confluence. So you would agree with me that with this technical information we have on the chart, it is quite clear that we are within a critical structure where, depending on what happens within this area at the beginning of the week, will determine if we are going to be buying or selling the GBP USD. Now, going into next week, we want to see how market is going to react to this area. How we're going to see a form of reversal setup, maybe like a double bottom structure around this area, where the breakout of the neckline will be all we need to continue the uptrend situation, or how we're going to see price break down both the ascending trend line and that key level at the 1.292 inside a sell-off. Trust me, I will be with you in the comment section on Monday morning after monitoring how market participants will be reacting to this confluence during the early hours of the week to decide where if we are going to be buying or selling this asset. If you found this video useful for your trading strategy this week, I would really appreciate it if you could hit the thumbs up button. Your support not only means a lot to me, but also helps the video reach more traders who might benefit from the content. Thank you in advance for doing so. If you haven't already, make sure to subscribe to the channel for more insights and updates. By subscribing, you'll stay informed about my latest videos and commentaries, and you will be the first to know when a new content is dropped. Looking forward to seeing your thoughts in the comment section on Monday morning, and I wish you the best of luck, and do have a wonderful evening, everyone. Bye bye.